Today, we're diving into a fascinating topic: how the US elections are shaking up the cryptocurrency market. If you've been following crypto news lately, you might have noticed some major price movements as election season heats up. So, what's the connection? And how could election results impact the value of your favorite coins? Stick around as we break down the potential consequences, key factors, and what experts are predicting. First, let's talk about why the US election even affects the crypto market. Traditionally, financial markets react to elections because of the anticipation around new policies. Cryptocurrencies, while decentralized, aren't immune to these forces. Political uncertainty, potential regulatory changes, and policy decisions all influence market confidence. With each new administration, there's a chance of different rules regarding how crypto is taxed, traded, and monitored. For example, in 2020, Bitcoin and Ethereum saw massive surges following election-related news, partly due to uncertainties in traditional finance. But why crypto specifically? Well, many investors view cryptocurrencies as a safe haven from traditional markets, so when there is political or economic instability, they turn to assets like Bitcoin. This year, we're seeing similar dynamics as we approach the election. So, what are the key issues? First and foremost, regulation. Both Democrats and Republicans have varying views on crypto regulation, but most agree that crypto needs more oversight. Democrats often push for consumer protection and anti-fraud measures in the crypto space, while Republicans may focus on fostering innovation and reducing bureaucratic hurdles. The next administration's stance could define if crypto becomes more mainstream or faces stricter control. Another crucial topic is taxation. For instance, there are ongoing discussions about taxing crypto gains more heavily. Right now, some US citizens might not report crypto earnings, but stricter policies could change that. If the new administration makes changes to the tax code to clamp down on crypto earnings, it could affect investors' returns, causing some people to leave the market or bringing more transparency and trust. Now, let's look at some of the recent market movements influenced by election-related news. Just as we saw after the Federal Reserve's rate announcements, news of upcoming policies often causes spikes in Bitcoin and other assets. Some investors hedge against economic changes by buying Bitcoin as a long-term store of value, especially if they anticipate inflation or dollar devaluation. The US dollar's performance is another factor. If the dollar weakens due to economic policy changes or inflation concerns, some investors look to crypto as an alternative investment. And given that the Federal Reserve might take a different direction with each candidate, the crypto market watches closely. After all, when fiat currency loses value, decentralized assets often see an influx of interest. So, what are the experts saying? Some crypto analysts believe that a pro-innovation candidate could propel Bitcoin to new highs, as this would likely mean fewer restrictions and more mainstream adoption. On the other hand, if the elected leader takes a stricter stance on financial regulations, crypto might see a temporary dip as investors assess the risk. Several well-known financial experts, like insert name of relevant expert, have pointed out that with political support, crypto adoption could accelerate, attracting big-name investors and major financial institutions. This would drive up prices across the board. Alternatively, if policies curb crypto freedoms, we might see a slower pace of growth or consolidation within the market. So, how should you, the crypto investor, prepare for what's ahead? First, keep an eye on the candidates' stances and any news related to crypto regulation. If you're a long-term holder, remember that the election is just one event in a much larger market. But if you're trading short-term, be cautious of increased volatility and set stop losses or alerts to avoid unexpected drops. At the end of the day, no one can predict exactly how the market will react. But by staying informed and understanding the connection between politics and finance, you're already one step ahead in navigating the wild world of crypto. Thanks for watching, and if you found this helpful, please like, subscribe, and let us know in the comments what you think.